Hey guys, welcome back to the channel. My name's Max, and this is episode 1 of a brand new show called The Daily Factor. And during this show, we're going to be analyzing individual securities that are in the MaxFactor, but we're going to kind of go deeper, and we're going to have kind of a study hall and get behind the numbers on and we're going to do it on a daily basis. Now, the weekly MaxFactor countdown show is still going to continue every Saturday. That's one of my most popular shows. I know a lot of you guys like that. I've received a lot of good comments on it. But the daily show is going to allow us to dig deeper and go kind of inside the holdings and go inside the statistics. And it's really important to understand what's actually driving the performance of these high yield portfolios. So what is the MaxFactor, you might ask? The MaxFactor is my own metric, and it's designed to be supplemental to existing measures of investment performance. I realized in the last 2 years that I've been covering these ETFs that traditional Wall Street, TradFi, doesn't really have a good way to evaluate these ETFs. Total return tells us part of the story. So what I do, what the MaxFactor does, is it separates out the NAV return and the yield, and it looks at them independently. Let's say you have two assets. Let's say both are up 20% on a total return basis year to date. Okay, so asset A and asset B. So let's say asset A, though, 2 months ago, it was down 50%. The NAV alone was down 50%. Last month, the NAV was up 50%. And now the total return's at 20%. Asset B, let's say it was, 2 months ago, its NAV was down 25%. Last month, its NAV was up 25%. And now it's kind of settled in year to date on a total return of 20%. So, total return is definitely how fast your money compounds. And compounding is the eighth wonder of the world. I think it was Warren Buffett that said that. I agree with that. But I would rather have asset B in this situation. Asset B is more valuable to allocate in a portfolio. It's not only how you make money, it's also important that you're able to hold the investment over time so the compounding has time to work for you. Wonder if you were on margin and living off the dividends, asset A would have given you a margin call. Even despite the fact that it's up 20% year to date, you may not have been able to hold it. Wonder if you have paper hands. Would you be able to hold an asset like asset A? You have to put the time in for the asset, for the compounding to work. So the MaxFactor IDs, what is a reasonable level of volatility. Now, what is a reasonable level of volatility and a reasonable level of risk? That's in the eye of the beholder. And there's no certain level where volatility becomes reasonable, but we can absolutely take the universe of 134 high yield ETFs, which is what's in the MaxFactor right now. It's growing every week as these high yield ETFs grow, but we can take those ETFs and we can compare them to each other, and we can absolutely determine what a reasonable level of volatility or a reasonable level of risk is on a relative basis. Now, what the MaxFactor will do, and we talked about what it will do, it's gonna give you an apples to apples comparison in a way that's better than TradFi to measure these. But what it won't do, it can't predict the future. So think about Morningstar. If an ETF has a 5-star Morningstar rating, that's good, but that indicates how well the ETF has done in the past. There's no guarantee that a 5-star from Morningstar will continue to be a 5-star. However, it is a good sign. It is one of the many things you can look at. And the MaxFactor is the same way. It's not going to be able to predict the future. Nothing can, but it can give you the ones that have the best mix of attributes in the past. And typically those will carry forward. The requirements to be in the MaxFactor is you have to be 3 months old, and you have to at least pay a yield of 5%. Now, the MaxFactor doesn't have to be only option-based high-yield ETFs. On my channel, The Covered Caller, that's what I mainly talk about and specialize in. Covered calls aren't the only way to get an income. You've seen recently Roundhill doing it with swaps. You see CEFs, closed-end funds like CLM from Cornerstone that does a great job. Speaking of 5-star Morningstar ratings, I believe they have a 5-star rating for Morningstar. It's a great fund. And also, we're looking at preferred stocks. We can look at preferred stocks that pay a yield. Today, we're going to examine today's study hall, we're going to examine the 3 recent additions to the MaxFactor, and then we're going to kind of drill down on some bond high yield ETFs. Okay, so first of all, let's talk about the 2 preferred stocks that I added to the MaxFactor today. So the first one's called STRD. This is the Strategy Stride preferred stock, and it's the 10% Series A perpetual stride preferred stock. Now, it was issued by Strategy, Michael Saylor's company, MSTR, Mr. It has various names that people call it. It was issued by them in June of 2025 with an initial offering. The initial offering on this baby picked up $1 billion. Now, the initial IPO price is 85. So this preferred stock carries a 10% non-cumulative annual dividend paid quarterly on a stated value of $100 per share. The dividend structure is non-cumulative, meaning if Strategy's board, i.e. Michael Saylor and his buddies, don't declare a dividend for that given period of time, it doesn't accrue or carry forward. STRD sits junior to Strategy's other preferred offerings, STRK, STRF. By sitting junior, it means you're going to be in line behind those other preferreds in a bankruptcy situation. So it is going to have a little bit more risk. They call that the capital structure. It's behind in the capital structure. So what this gives you, it gives you a higher yield, higher risk instruments within Strategy's Bitcoin-backed, securities ladder. So then we've also added STRC, the Strategy Stretch preferred stock. This is called the Variable Rate Series A Perpetual Stretch preferred stock. Now, it was launched in July of 2025, so it's just recently about 4 months old. It's just become old enough to go, or 3.5 months old, to go into the MaxFactor. Now, this one did an IPO also, had an initial offering. It raised between more than $2 billion. Now, this instrument has an initial dividend rate of 9% annually. Now, it's paid monthly, which I know a lot of you guys will like, rather than quarterly like the last one was. But what distinguishes STRC Stretch is its variable rate structure. Strategy has the discretion to adjust the dividend rate within certain guidelines, and the security is engineered to trade near the $100 per share area, functioning somewhat like a synthetic stable coin with a yield though, right? Now, the monthly payout structure and target price stability make it appealing to income-focused investors seeking cash-like distributions with higher yields than a traditional money market. At 9%, that's a lot higher yield than a traditional money market, 3 times. Also, we added one more new stock, and it's in a different area of the economy. It's TLTI from NEOS. It's called the NEOS Enhanced Income 20-plus Year Treasury Bond ETF. So we're going to look at TLTI, which is actually an ETF, unlike the other ones, which were preferreds. The NEOS Enhanced Income 20-Year Treasury Bond ETF launched on December 11th, 2024. So it's not quite a year old yet. It's been eligible to be in the MaxFactor for a while, and just by an oversight of mine, it's not in there. So I figured that out and put it in there. If you guys know of any assets that meet the requirements to be in the MaxFactor, but that aren't yet in the MaxFactor, let me know, and I'd be glad to consider them and put them in if they meet the requirements. All right. Now, unfortunately, TLTI hasn't really caught on. It has 3 to 4 million in AUM, which is pretty small for an ETF. It's actually tiny. Now, NEOS is a great company, and NEOS manages them, and NEOS has some of our other favorite funds and a lot of other funds that are kind of frequent entrants into the MaxFactor, into the top of the MaxFactor. This thing has an expense ratio of 58 bips. TLT is actively managed fund with a dual strategy approach, and this is pretty familiar. If you watch my channel, what they do is their core holding consists of the TLT, U.S. Treasury securities. All right. And TLT is kind of like the SPY of the bond world, or of long-term bonds. That's kind of what it is. So that gives you that exposure gives you exposure to the long-term bonds, right? What makes TLTI distinctive is they lay an option overlay on top of that. So they sell European style SPX put spreads to generate additional monthly income. So they don't even sell options on the TLT. They sell options on the SPX to generate monthly income, right? Now, these contracts, because they use the European settled index contracts, these are 1256 contracts, and as such, they receive favorable tax treatment under the IRS rules. Gains and losses are marked to market at the end of the year and split 60% long-term and 40% short-term for tax purposes, regardless of what your holding period really was. And this can be an advantage in a tax situation, of course. And the fund also does other things. They employ tax loss harvesting, and a lot of these funds do, to try to enhance the after-tax returns. Now, the target monthly distribution, and that's combining both the yield from the Treasury sleeve and the option premium income, is lately it's been around 5%. We're gonna take a look at that. So that's today's study hall. Let's get in here and let's look kind of behind the numbers. We're gonna look at these three ETFs. Now let's start with the MicroStrategies ETFs. Okay, so here's my main database. Right down here at the bottom, number 143 and 144. I said 134 entrants. I meant 144. My apologies. Right now, there's 144 ETFs that are qualified to be in the MaxFactor and that I cover. So STRC, there's Stretch, and there's STRD. Let's just look at them separately. I'm going to light up STRC. So the first column B, is the trailing 12-month yield. So this thing's paid $2.48 so far. It came out right at the end of July 2025. Oh, I'm sorry, the end of June 2025. So far, it's paid a 10.45% dividend. That just takes the current price and figures out the dividend and just takes it as a percentage. Now, since it hasn't been around a year yet, this is also annualized. It hasn't made 10.45%. It's actually made about 2.5%, but it's just been out a little over a quarter of a year. So at this rate, we'd be expecting 10.45, but this changes all the time. And so, the MaxFactor updates live and in real time every day. So this is kind of the important way to look at it. Column E is the price at the close of business the other day. Well, Friday. Column F is the price 90 days ago. So this thing's gone from $89.95 to $98, almost $10. Anyway, you take that on a percentage basis, it comes out to about 9.7%, and it's right there. And then another important variable is in column J. Now, column J is the volatility. Now, I made my own metric for these high yield ETFs, and this metric I made tells you if STRC had a VIX for it. Like the SPX has a VIX for the S&P 500. And it runs 12, 15, 16 normally. And, depending on what the volatility is doing, but kind of the normal thing is, I'd say 12, 13, something like that. So anyway, this thing being a 9 means it's less volatile than the SPY by about a third. All right. So now let's go over here. Now STRD is the next one we're looking at. This is Stride. This thing's paid $3 worth of dividends. It's been out a little bit longer, about 3 weeks longer. Now, its trailing 12-month yield is 10.19%, so pretty close. Now, if we look at the NAV, we look at column F first. That's the price 90 days ago, $84.86. So basically $85. So it went from $85 to basically $80. We can round $79.86 up to $80. It went from $85 to $80. It lost about $5 on an asset that initially cost $84. As a percentage, that comes out to only 5.9%, but unfortunately it's 5.9% negative, whereas STRC actually had positive NAV. Well, anyway, the MaxFactor throws all this into the equation and parses it out. And like I say, it also has to consider what's in column J. Now, column J is the volatility. So it would be, if this thing had a VIX, what would its VIX be right now? This VIX right now would be about a 19. So a 19 on a VIX is a little bit more volatile than the SPY. With STRD, we could expect it to be maybe 10, 20% more volatile than the SPY. With STRC, it's going to be about a third less volatile than the SPY. Just depends on what you're looking for. So here's what I wanted to look at now. Unfortunately, these qualified, STRC, STRD, well, and TLTI qualified to be on the MaxFactor yesterday, but they weren't on there yet. But I put them in here to see if they would have made the top 10 or top 20, and I'll be darned if STRC, otherwise known as stretch, would have darn sure it would have been number 10, would have been right between AMDY and right between Tesla. And Tesla's had a heck of a run lately. So in any event, if we look over here, if you know, it takes you look at the yield, you look at the NAV return, you look at the volatility, and the short-term MaxFactor would have put it in 10th place. So that's impressive. That is very impressive. I apologize to fans of MicroStrategy's, Mr. and you know, Bitcoin Maxis that I didn't have it in there yesterday. But yes, this is a good performer, and it's performing as well as some of these other ones. It's actually performing a little bit better than Tesla. Now, Tesla pays 10 times the yield. Tesla's paying about 108%, but Tesla's NAV is only up 4%. Okay, and Tesla's a lot more volatile. But you throw it all in there together on a risk-adjusted basis, they're very close to each other. All right, so now I want to talk about, let's go back to the main database, and let me show you. I also added TLTI in here. Now, I did this kind of selfishly. No one really requested this to be in there, but TLTW is doing well lately. Bonds are having their moment as interest rates. Remember, as interest rates come down, it makes bonds more valuable, makes bonds prices go up, or even if people think interest rates are coming down. So lately, the TLT itself, the underlying, has been rallying. Well, I have TLTW, and it's been a good fund for me, but I want to see if there's any good alternatives out there. I use the MaxFactor to inform my own allocation decisions. So I put TLTI in there as well. Neos is a good company, and I want to start being able to compare it on an apples-to-apples basis. So, but just to refresh what it's doing, it's telling you pay $2.71. That was the dividend. It comes out to about 6.46%. It's been out about 10 and a half months, but annualized it pays about 6.46. The NAV's gone from 45.39 to 48.11. That's not bad. It's up 6%. So its NAV was, wasn't up quite as much as STRC's NAV that was up 9%, but it's still respectable. Now you look over here to the volatility. The volatility is a 9, which is commensurate with STRC and also less volatile than the market. And of course, it's because of many things, but the main thing is because this is based on the TLT. This is based on bonds. Bonds are the underlying, and then they're selling SPX options. But in any event, bonds and really SPX isn't super volatile, but you throw it all in together and it comes out to about a 9 on volatility. Okay, so here's what I want to do next. I've put TLTW and TLTI on a sheet next to each other, and we're going to compare them with each other. But first, I was just thinking, I should have prepared for this a little better, but we could probably look at BNDI also. Now, BNDI is another bond-based high-yield fund, so let's throw it into the comparison also. And let's kind of take a look at this, kind of have a little study hall and see if I need to change my allocation or, at least consider it. Okay, so let's just look at them. Let's just look at column D first. TLTW pays the highest yield. So I like high yields. So that makes me think I'm doing the right thing, but it depends on the other factors as well. So TLTI and BNDI pay quite a bit less yield, 6 and 5% respectively, or 6.5 and 5.5. Right. Okay. The price is all relative, but let's look at the NAV return. The price itself, the prices themselves don't matter that much as raw numbers, but of course, as part of the return. So TLTW was up 5.89% only on NAV. That doesn't include that 15% annual dividend, just NAV alone, up 5.8%. Now, TLTI was up 5.9%. I will call that a tie. They both had the same NAV performance. But then on volatility, TLTW is a lot less volatile than TLTI. Remember, TLTI was a 9 vol, which was about 30% less volatile than the SPY. Now this one's a 6 vol, so this is about 30% less volatile than TLTI, and with about maybe half the volatility of the SPY. So TLTW is definitely the stablest according to my volatility metric. But stability is not everything. Lots of times you don't want too much stability, can hurt you sometimes in your returns. We want a good mix, right? Well, in any event, let's just look at the short-term MaxFactor, 1.341. So they're ranked in order. TLTW is the most valuable in a portfolio right now at this time. TLTI and BNDI are behind. It doesn't mean they can't change. They could switch their option strategy, or whatever they're doing might be a better strategy for some different market condition in the future. Like I say, this changes live and in real time every day. So we'll keep an eye on these. But right now, I feel pretty good about my allocation to TLTW. All right, guys. Well, that's about all I have for you guys today. I just want to make this kind of a quick show where we kind of get behind the numbers. And I kind of went into what the MaxFactor was and how it works. I'm not going to do that, every show going forward. But, I've got a lot of interest in the MaxFactor lately. And that Saturday show is one of my best shows. And I'm really liking it. I've got a lot of positive feedback on it. So we're really going to dive deep into this and really, use this as a tool like I've been doing to help inform our decisions and help us make a wise decision when we consider all the factors. Total return doesn't consider all the factors. I mean, it doesn't. It just looks at the end of the road, which is good. But it matters how you get there. The ride matters also. It's not just where you end up. It's also how you get there. All right, guys. Well, thank you so much. And you have a happy Sunday and have a good what's left of your weekend. And I'll see you tomorrow on my daily live streams. I'm still doing the daily live streams where we talk about everything kind of generally in the market. So tune in for that as well. Thank you so much. And you have a great afternoon.